Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, the bulls have it on the street today. Another gap-up start awaits us this morning. If you look at the Nifty futures on the SGX, they're indicating almost 125 points up move on the Nifty. Wall Street, the handover for Wall Street was also very, very strong. Clearly a 1.5 to 2.5% sort of up move we saw in across the benchmark indices in the US, and Asian markets have also started quite well. But of course, day before yesterday it was crude oil prices falling 9% that got everybody so happy. But crude oil prices actually in fact rallied yesterday overnight. I mean, they rose almost 6% on a day-to-day basis. So clearly, Santo, it's a very muddled macroeconomic setup at this point of time. Yes, rate hike expectations are moderating. The market no longer expects the Fed to go, all bazooka on rate hikes. But at this point of time, what the Fed is saying and what the market is saying, there is a lot of difference in opinion.
Well, yes, clearly. I think there is still no clear picture about commodity prices. Particularly, oil is the one that most equity investors are looking at. It's a very confusing market. I mean, markets are always confusing and hard to predict. But at this point, all I will say is that one just can't argue against the prices. Just a couple of weeks back, everything was looking quite bleak, and now the situation has changed dramatically. But my gut says that, CJ, now you're likely to see the Nifty now move in a narrow range because you don't have any particular sectors that can really, throw up some blockbuster.
What about the commodity consumer names? I mean, they were the one who were battered earlier in this year because, of course, commodity prices were rising. Don't you think that probably investors will now start shifting towards the commodity
margins?
consumers?
Yes, margins and profits, yes, but then top line growth, I'm not so sure about that.
Top line, yes, of course. That is the big question mark given the demand scenario at home as well. But of course, I think the most important thing yesterday that happened in the US market was the VIX. I mean, the Chicago VIX index, that fell below the 26 level. Clearly, that has been one of those, buy zones for investors. If the VIX falls below 26, a lot of people were suggesting that could further, ignite the rally in the market. And at home also, the India VIX hit a 1-month low yesterday. So I think the VIX at this point of time is probably going to make a lot of bulls happy, and we will have to keep an eye out on how that develops going forward. Let's quickly move on to some of the stocks that we have on our radar.
Yes, starting with Mahindra and Mahindra. CJ, I've been a big votary of the stock for some time now. Yes. And it has been a very strong performer as well. Close to about 40% rise in the last.
One of the best performing Nifty stocks.
Clearly among the best performing Nifty stocks and in the auto pack. But now I think there is a surfeit of positive news. We had the story about M&M gaining market share in the SUV segment and valuations being reasonable. All that were the major drivers. Plus, the tractor side, the performance was decent. Although there are now some concerns as to how they will do in the near term, but overall it's been mainly the SUV story and valuations. Now, if you look at valuations, after the big run-up, probably the comfort is a little less than what it was few months back. That's one part of it. True. And plus the SUV story is discounted. Now the latest development, which is that British international investment taking a major stake in its M&M's EV subsidiary and valuing it at about $9.1 billion. That's the valuation. That's a big news.
For a company that does not even exist at this point in time, if I'm not wrong,
exactly.
They're going to form the EV, right?
Yeah, so I think this probably could be, I'm looking at it from a contrarian point of view, this could probably be a signal, to take profits off the table for the time being. The run has been fantastic. Now, the EV project, while it's good, it will take some time before it actually starts trickling into the valuations. You might see a bump up, CJ, but I would be a little cautious at this point.
But Santo, I think you are basically saying that, bhai, bahut zyada meetha ho gaya hai. Itna meetha nahi chahiye.
Exactly.
Too much of anything is not good for me. So clearly, I'm going to now back off. But Santo, I think you should look at it the other way. I think so far, see, M&M's levers were its traditional business, right? Your SUV business, your tractor business. Of course, there were doubts about, I have also spoken about the doubts around the tractor business, which actually contributes about 45% to the company's revenues. But I think this EV thing is very interesting because M&M so far has lagged behind Tata Motors, right? Now everybody is trying to catch up to Tata Motors and trying to get into that race for to dominate the EV space. And I feel the fact that they've got an international investor onto this project, that of course will reduce their need to take more debt on the book to probably accelerate their investments, and also it will give you know-how and expertise that could probably help them catch up with Tata Motors going ahead. Now Maruti and M&M both are doing it, trying to catch up with Tata Motors. Probably at this point of time, I would suggest that M&M has a better bet than Maruti, because Maruti is too focused on profitability at this point of time instead of market share. So for me, I think this could be a probably another trigger for a good rally in the stock going ahead, especially now that investors will start looking at M&M as an EV play as well, and that is only going to add to the valuation story. Then along with the fundamental or the traditional business that the company had. So for me, probably now is the time to probably get more bullish on M&M instead of getting cautious on the stock.
Remember, the whole street will now be bullish now that the news is out there in the public well.
Well, being part of the crowd is not always bad. That said, one stock which is not part of the crowd at this point of time, or at least the bullish crowd, is Hindalco. But I feel that this is one stock, Santo, that contrarian investors out there should really keep an eye out on. The stock, CLSA came out with a report earlier this morning, and they have retained their bullish call on the stock. They are still recommending clients to go out and buy the stock, because they feel the reaction or the underperformance in the stock has clearly been overdone in the face of what appears to be a relatively resilient earnings platform for Hindalco. Clearly, CLSA believes that the Novelis business, or the Novelis arm of the company, clearly that can continue to sustain its growth going ahead. Even if you account for possibly some cuts to earnings estimate, I think overall still the story is quite strong for Hindalco to deserve better prices, the stock price to deserve better levels going ahead. Apart from that, another thing that is important for me is the fact that China, we saw reports coming out yesterday. Bloomberg reported that China is looking at about $200 to $220 billion stimulus package going ahead for the economy in order to turbocharge the economy, given the impact that COVID has had on the world's second largest economy. Now that, I think, could end up boosting aluminium demand going ahead and could provide a support to aluminium prices, which have fallen through the roof, in the past few weeks. So clearly, few things are looking up. Valuations definitely are attractive. I mean, if I'm not wrong, the EV upon EBITDA in terms of forward, earnings is possibly at its decade low. So clearly, a lot of beating has been taken by the stock, but contrarian investors should start looking at this counter.
Well, again, CJ, this is also a stock I've been positive on for the last few weeks now, ever since a steep fall. Now,
but I was positive before you.
Okay, fair enough. Point taken. If you look at all the fundamental factors, everything is in favor of Hindalco at this point in time. You look at the book value. One cause for worry slightly could be that its upcoming capex program, which is where the whole sell-off in the stock started. That is something that caught analysts off guard. But I do agree with you. The Novelis side of the business, that is which caters to the high end, like beer cans, auto parts, and all that. That segment should see some good strength. That should be able to support the market. And also, we still haven't had the last word on commodity prices yet. Commodity prices have cooled down a bit, but will they fall sharply? The jury is still out on that. So this is a stock, I think, where I would say that the downside is limited. But just one thing, typically for commodity stocks, the way it works is that you buy when the stocks are very expensive. The moment they start becoming cheap on fundamental parameters such as book value, price to earning multiples, that is when they start underperforming. So that's my only concern.
Interesting.
Well, the next stock on our watch list, Apollo Tyres. Now, CJ, good bounce back in the stock over the last couple of weeks. The stock has rallied close to about 15-odd%. Now, the sentiment for tire stocks in general was quite negative, and for good reason. Input costs were pretty high, and as a result of it, severe margin pressure, which meant that even though the top line growth was decent, the result, the bottom line was nowhere near what it ideally should have been. Now, you got two factors here. One is that crude prices they're still elevated, but off highs now.
They're back at 104 handle for
yes, but they're definitely cooling, and now marketers got used to that kind of higher prices. Next, you have rubber prices, which have remained stable. You saw a big jump from about September levels to about May, but to about March. But since then, again, it's been steady at around 160 per kilogram. Now, what has also changed is the outlook on the auto sector in general. Auto sector has had a good run. Most auto stocks are doing well at this point in time, and the market feels that the worst may be over. That being the case, clearly auto ancillary companies also should benefit. CJ, you're seeing some huge build-up of positions in the derivative segment in Apollo current month futures, which lead me to believe that maybe there could be a short-term bump up in the stock.
I think, Santo, the market is sort of getting ahead of itself. Yes, a few things are turning around. Things are looking up for on the ground for the automobile sector at large, but I just feel that the margin question still remains to be answered, given the fact that crude oil prices are quite elevated at this point of time. I mean, from an year-on-year perspective, clearly the margins are going to suffer, even if you see some bit of improvement on a sequential basis. But on a year-on-year basis, clearly profitability will going to be, one of the questions that investors are going to ask the management as and when they report their first quarter earnings. So for me, Apollo will probably be something that I'll keep an eye out on, but will not probably go whole hog at this point of time. And not only Apollo, probably the entire auto ancillary space. I think it's worth the wait to see out the second quarter earnings, then see whether rural demand is coming back, whether consumer discretionary spending is rising, whether inflation is falling, and whether crude oil prices are softening even further. And I think then you can probably take a bet on this sector with a more sure-footedness going ahead. Well, one stock that is going to probably see a lot of gains today is Uflex. Well, Moneycontrol Pro has initiated coverage on the stock with a positive rating, and I'm totally behind it because, Santo, this is a stock in the packaging film industry that probably is one of those recession bets that you can take, which hedge you against a recession or a slowdown in the economy, because the sectors that Uflex caters to, such as FMCG, pharma, they are generally, a recession-proof sector, generally expected to continue to provide volume growth and demand going ahead. So clearly, from a packaging film perspective, Uflex is looking like a good bet for longer-term investors at this point of time. And if you look at, the earnings or the valuation, I beg your pardon, of the company, at this point of time, it's available at 2.6 times 2-year forward earnings, Santo. That is very, very attractive in a market that has traditionally been known for, its expensively priced stocks. So clearly, if you're a longer-term investor, you can clearly look at the stock from a longer-term perspective. And the other bit is, from a short-term perspective, is that the management indicated at a potential IPO for its overseas arm, which is basically the Middle East arm. And if that happens, that could trigger a possible re-rating in the short term in the market cap of Uflex itself, as the value unlocking will happen. So clearly a lot of things looking good for Uflex, not only from the long-term perspective, but from the short-term perspective as well.
Well, no doubt, Uflex clearly is one of the leaders in that segment. But just this thing about, packaging films, if the FMCG segment slows down, already we are seeing signs of slowdown there, that will clearly have an impact on packaging companies like Uflex. Secondly, in general, valuations for this segment are always cheap. You get the stocks at 3 times trailing, 3 times forward.
I think largely because they are generally tagged along with other cyclical sectors.
Exactly. So that cheap, is that a trigger? I'm not so sure. Well, moving on to the last stock on our watch list for this morning is Pricol, an auto ancillary company.
Today you're all at
auto ancillaries, yes, and this is a company which has a wide range of product offerings, and it's also tied up with some of the best players in the segment. So for instance, you have something as low end as probably wipers, pumps, going all the way up to sensors and telematics. Now this company, what caught my attention is that it's been one of the strong performers for this year. It has moved up from about 198 odd levels at the start of the year to about 130, and a very, very steady move there. And the earnings growth, it's been compounding at a good, healthy rate over the last 3 years, about 32%. The only thing is that the sales growth has been a bit tepid, but at the same time, the company is doing certain right things as far as the balance sheet is concerned. It has managed to bring down its debt significantly over the last couple of years. So this is something I would call a slow burn. Now, the company is in the news today. It has signed a licensing agreement with BMS, a French company, for providing battery management solutions for EV, electric vehicles. CJ, the word that gets you all excited. So this is a stock that I'm keeping on my radar. Well, the
Well,
market.
I'll come back to it, yeah, but let's just have a look at how the market is opening this morning, and I think it'll, unsurprisingly, it's a very, very
strong
strong
opening
start.
there,
Yeah.
130 points up on the Nifty, 16,259. Good breadth there, 1,500
Yes.
stocks up and just about 200 stocks down.
And
on
I
the
think,
NSE.
Santo, that is thanks to the small cap and mid cap space. Clearly, the Nifty small cap 100 index has opened higher by 0.8%, and Nifty mid cap 100 about 0.6%. So clearly, the broader market is leading this comeback on the Lal Street. The Nifty is rising, of course, but I think it's lagging behind its smaller peers at this point of time, and unsurprisingly so, because the valuation comfort probably in the mid and small cap space is much more than the large cap space. Because let's not forget, earlier this year when the market was falling, a lot of fund managers out there, portfolio managers out there were advocating the large caps or quality names would be the place to be taking the safety or taking haven at. So at this point of time, if the market does turn around, you will see those sort of sectors or stocks underperforming, while you see the smaller mid cap stocks taking the mantle for the bulls going ahead. Well, Santo, coming back to Pricol now, I take your point about the EV partnership, about auto ancillary. Of course, my skepticism for the entire auto space still holds. As I mentioned earlier for Apollo Tyres, clearly I would want to wait out till the second quarter earnings come out to probably take a more informed bet on the sector. But apart from that, Pricol, in particular, I have noticed that mutual funds have been paring their stake in this company. They have been utilizing the rally in the stock this year to trim possibly profit book, because they would have gotten into the sector last year because it was one of those sectors that mutual funds are buying. So at this point of time, I think this could limit the upside going ahead. And apart from that, given the sort of gains that we have seen, as you said, it's probably going to be a slow burner, and slow burners are just not my vibe. So I think I will probably scoot away from it and focus on other stocks that can give me better returns in the short term. So for me, Pricol, good bet, but maybe after September, not at this point of time.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action.